NIO gang, holy smokes. What a day we just had. Here I am yet again talking about an absolute monster day within the NIO ADR shares camp. Up over 12% in the course of one trading day alone and making the highest dollar count increase in one trading period in NIO's history. A $6.13 increase. Wow. In this video, I want to discuss why this surge happened. I want to mark NIO's massive potential in the road to becoming profitable and analyze whether NIO shares are currently a buy after this massive surge, or should you risk waiting for an ensuing correction to create an ideal buying window. Let's get after it. What is up, you guys? Nick here. If you're new, welcome. If you're returning, welcome back. Hit that subscribe button if you haven't yet. I do a ton of videos like this covering EV, tech, IPOs, and focus my investment strategy on disruptor growth companies. I started investing in NIO at $3 a share and first told my subscribers to invest in them at $7. I keep a very close eye on this company to keep my subscribers ahead of the curve. You don't want to miss any of my future picks. Smash that like button for the YouTube algorithm. It really helps out the video, and more importantly, I'd really appreciate it. Without further ado, let's get right into it. Alright, first things first. So why exactly did NIO shares increase? And why did they increase by these huge margins? Well, just as I told my subscribers last Wednesday on NIO's correction day, the market tends to lag behind really great earnings calls. In case you were unaware, NIO posted phenomenal Q3 earnings just last week and yet again beat analysts' expectations. They simultaneously beat analysts on two fronts, losing less than expected at 154 million USD and earning more than expected at 667 million. These strong sales are ever increasing, reaching that profitable threshold. And although there is still indeed a lot of work left for this company to do, they are undeniably moving in the right direction. And just like I thought, the broad market was lagging behind these earnings calls. However, they're definitely on to us now, NIO gang. There were some wary analysts concerned over NIO's growth margins, one by the name Edison Yu, who claims that NIO's revenue numbers are simply in line with what should be expected for a growth company. NIO had posted a 12.9% gross margin, and many analysts had been hoping for a figure much closer to the 15% mark. He did this to all just then raise his price target by almost 50%. Lol. So why did he do that? Well, because Edison Yu, or bears, don't actually control the stock market. We do, the people. And guess what, bears? The bulls are out here to play, and we all see the future potential of this company. And that's an important point that I want to drive home here. When investing in a company, the market can act irrationally, yes, but beneath all those irrationalities, there is something that investors are trading on. And in NIO's case, it's not the difference in 3 percentage points on gross margin in Q3 2020. It's their future gross margin in 2025. It's their future delivery capacity in 2030. It's their expansion capabilities. It's the promise of becoming a legitimate contender to rival Tesla's currently unrivaled near monopoly on the electric vehicle industry. Going back to Yu's and other bear analysts on this company, Yu actually does state that he sees a bright light at the end of the tunnel for NIO. He states that there was an actual legitimate reason that NIO's gross margins didn't hit his forecasted 14.9% hopeful. He states that the lack of margin was, and I quote, mainly due to an absence of regulatory credits, which we thought would be realized during the quarter, but instead will flow entirely into fourth quarter. Let's digest that for a second. A bear analyst who A, just raised his price target by almost 50%, and B, is now stating that the fourth quarter could be revolutionary, game-changing quarter with much increased gross and profit margins? What? Is he potentially turning bullish? Yes, this is the power of NIO, their business operations, and their strategic investments. Even the bears are sneakily adding upsides into their forecasts. How cute. Edison Yu is saying that he believes fourth quarter margins will be larger as regulatory credits will be almost entirely transferred over. In case you aren't aware, regulatory credits are distributed by governments, incentivizing auto manufacturers and clean energy creators to turn towards green and clean energy. California has a program as such called the Zero Emissions Vehicle ZEV program, just for an example. Companies are then dinged if they don't have enough regulatory credits by the end of the year. Companies who solely focus on manufacturing and distributing electric vehicles, such as NIO, are able to bank in and rake in many more credits than they need to not get penalized. And in turn, they sell these excess credits to other companies, so they in turn do not get fined. Yes, you heard me right. It's almost a ludicrous model that really isn't functioning as intended, but still kind of promotes EV and clean energy. But hey, that's just the government for you, kind of stumbling along. It's important to note that these credits are given for free to companies who comply and manufacture EVs. So when a company like NIO goes out and sells them to a company who needs them, they are virtually making a 100% profit on these credits, which they can then in turn bump up their gross margins with. So why is this so important? Why am I spending all this time explaining this? Well, it is actually important, as with the end of the calendar year, these excess regulatory credits will become extremely lucrative for NIO in the coming months, and they will cash them in heading into Q4. These are estimated to be worth approximately $120 million USD, which is nothing to scoff about. They are essentially acting as NIO's secret weapon at this point, and I really do think that if NIO had forecasted margins under 10% heading into Q3, that they would have likely cashed them in then, as to not fear investors of slowing growth. However, at this point, they are likely going to be just the cherry on top for what has been an across-the-board phenomenal year for NIO and its shareholders. Because of this, because of the anticipation leading into NIO Day, the unveiling of NIO's newest vehicle, the EE7, because of the historically bulging of vehicles sold in the last month of the year, December, we are brewing up to what will very likely be the highest delivery months, combined with unheard of anticipation and hype leading into the new year. This is going to surge the stock price. It will. NIO has forecasted a 1 to 1.5% increase in gross margins leading into Q4, which still leaves them just shy of 15%. However, if we know one thing about NIO, we know that they have consistently and persistently beat even their own forecasting models. Remember, it's never favorable for a company to hit lower than they have forecasted, so companies typically tread with caution and place conservative estimates on future earnings, and I think that is exactly what NIO is doing here, and I would not be surprised in the least with the way NIO has been moving and dominating in virtually every single aspect to see a gross margin over 15% heading into Q4. Gross profits, which obviously lead in front of gross margins, are forecasted at landing around 20% for Q4. 20%. Guys, with every single quarter, we creep closer and closer to profitability, and I do know it is still a ways out, but I can smell it, and I'm hungry for it. It smells like bread, and smells like a lot of bread. Alright, so do I think NIO is currently a sell, hold, or buy? I've said it before, and I'll say it again. Let me be clear. I fully believe and trust that these current share prices, hovering around $50, will be an absolute fire sale on NIO's future share price. I would not be surprised in the least to see yet another doubling in the stock by NIO Day, which is slated for the beginning of January. This is when they are revealing their first sedan. Remember, NIO has been doing all of this without even having a sedan on their roster. The Chinese consumer has been trending towards smaller vehicles for the past few years, and now finally, NIO will be able to get in on the action. I wouldn't be surprised to see the stock hovering around the $200 mark by Q2 2021. There is little doubt in my mind, and as this company continues to avoid any missteps, continues to expand, and has plans for European expansion, there is very little not to like about this company and their business moves. I have been dollar cost averaging my way through this company, and I will continue to do so. Like I've said before, a few cents difference in the share price, or even $1 or $2, won't even make a dent 5-10 years down the road. So if the day happens to be red, great, I'll be picking up a bulk amount of shares. But if the day is green, great, I'll be picking up a bulk amount of shares. Did you get that? I put the same thing twice. Kind of funny. This share price has completely taken a life of its own and is gaining more and more steam, more and more momentum. Investors and the mass public have really caught on to just how lucrative this company can be. They are special. I am buying. I am bullish. Anyways, everyone, NIO to the moon as always. What a time to be an investor. What a time for this company. Smash that like button for the YouTube algorithm. I have a really cool promo in my description. 4 free stocks from Webull worth up to $1,600 each. This ends at the end of November. Don't sleep on it. Thanks for watching, everyone. I really do appreciate it. I will see you all in the next video. Cheers.